Good afternoon, and welcome to the Boring Millionaire podcast. My name is James Lamantia, and today I am bringing you a live market update. So normally, I go over the weekend, make my episode, and discuss what we saw in the week prior. Well, today we're going to do the same thing, but we're going to do a couple extra days, being that it's Tuesday, June 24th. So right now we are at 6,093 on the S&P 500 and 19,924 on the NASDAQ. So we are right there. We are right under all-time highs on both indexes, and I think we are just in fantastic shape because of that. I know it's a little redundant to say we're in good shape because we're at all-time highs, but it is more so the gears moving the trend. So we are in an upward trend. The market is strong. The market is healthy. Buyers are coming in, stepping up, and buying essentially stocks across the board. So everything that I've been looking at within the market is what's telling me that we are in great shape. Not just the numbers, not just the prices on shares. It is all of the fundamentals of what's moving the market that is telling me we are in great shape. These all-time highs are going to continue to be tested. And then once we prevail through them, we're going to continue running higher. And I expect to see 6,300 to 6,500 on the S&P 500 towards the end of this next little uptrend that we're going to have. So kind of to just go in full circle, when I started the podcast, the S&P 500 was basically at 5850. Then we saw it rally into the 6,000s after the election. Then in February, we kind of hit the brakes. We took a 10% decline from the highs. Then from there, when all the tariff news came out in April, it sent the market down a little over 20% off its all-time highs. Through April, we rallied out of that hole. Through May, we started to gain a little more, started to balance out. We had to kind of check out what we were looking for, see what direction the market was going to go in. And now through June, we've just been pushing the resistance. We've been challenging the all-time highs, and we're here now. So basically from February 17th until now, it's just been even, So buying those dips is what makes the money. I'm not going to spend a lot of time on that. That's not the focus of the episode. But if I'm painting a full picture in the 4-month span, buying the lows, buying the scariness, buying when prices were discounted, that's how you make the money in the stock market. There's always opportunity to make money in the stock market, but those broad across all stocks market declines, that's where you'll find the real bread and butter of investing in the stock market. But we've since moved on from that. We are in very, very good shape, as I've just been saying. And yeah, no more disaster mode. So that was the moment to be buying. So although it might seem scary, might seem make you feel a little more timid about investing in stocks when the market is in catastrophe mode. But evidently and mathematically, that is where the most money is made in the stock market. But we're not in April anymore. We're in June. We're moving into July. So let's discuss what we saw in the past 6 trading days leading up to today's trading and what I saw within that and what it's telling me about where the market will continue to move forward. So last Monday, which was the 16th of June, we saw the market pop right at the open. It was about 1.25% up, kind of just eased out all day. Just from the highs, just slowly drifted into lower prices, and that happened through the whole day of Monday. Now on Tuesday, we fell down to the lows that we saw the Friday prior. Wednesday, we popped a little higher, but we didn't go past the highs on Monday, and we continued to decline after that initial pop. Thursday, the market was closed for federal holiday. And then Friday, we saw the market fall again, and it basically met that same low that it saw the Friday prior. So as I've mentioned before in many episodes, it was creating a floor. We saw that it wasn't pushing lower than those lows that we saw that first Friday. And every time that we were meeting that level, it was basically just reassuring, hey, this is the lowest we're going. We're seeing that the indexes aren't falling below it. So establishing a floor, and now we've seen through Monday and Tuesday of this week, we've been rallying from that floor. So it's just been foot on the gas. We've just been going this entire week. Yesterday, the S&P 500 was up 0.96, just under 1%. And today we were trading, I think it was about 1.2% up. As I said, we're at 6,093. I know where we're at. I just don't know the math behind it right in front of me. So rally mode is in full effect. I'm a big believer that the market is going to keep on grinding and keep on moving on. And quite frankly, we're 0.8% away from a new all-time high. So if the market mimicked either one of the moves that we saw either yesterday or today, we're going to break that all-time high. We're going to be in fresh record territory. And what I want to discuss in this episode this week is what should you be doing while the market is at all-time highs? So in the past few episodes, as we've been inching up to these all-time highs, I've been shining light on some of the more refined strategic buying that I do when I'm looking at stocks. And that's going to become a little more paramount in an all-time high rally. So what I like to look for is stocks that fall at price discounts. Let's run a hypothetical. If you have a stock at $100 and it falls to $90, it's at a 10% discount. If you were going to your local grocery store and all the food you were going to get was 10% off, you're benefiting by a discount on something you're already getting. And that same way of thinking is applied in the stock market. If I'm already investing in something, I already want to be an owner in that company, hold these shares long term. Oh, now the price is discounted. It's falling as far as share price. It's the same thing you want to be invested in, just cheaper now. So I do look for price discounts, but I would also like to say just because a stock is falling or is at a lower price than its all-time high, that doesn't necessarily mean that it's a great buy. But I do prefer to buy things when they're at a discount, as most people would in most scenarios. And another thing I like to look for is when they trade at their 3-month, their 6-month, or their 1-year average. So those are 3 metrics that are basically religiously watched throughout the stock market. And traders, when they're looking at trading analytics, which is the very nerdy kind of stuff that people look at as far as like charts, volume, what's going on within the stock as far as the asset, when those analytics are lining up and people are seeing stocks trade at their 3-month, 6-month, or 1-year average, it does create a lot more incentive for people to be investing at those measurements and those metrics. So for all the time that I've been investing in the stock market, I have constantly seen stocks as well as the indexes trade at those metrics. So I like to look for discounts falling at one of those metrics, as well as there's nothing wrong with buying stocks when they're surrounded by bad news and bad PR. Again, just because a stock has bad news surrounding it, that doesn't mean that it's a great buy, but it could certainly help. So just one example, I'm going to keep using the same example if you've seen me talk about this in a previous episode, United Healthcare. United Healthcare issued very bad earnings. They issued no forecast. It sent the stock flying down. Then the CEO at the time had resigned. And then following that, the Department of Justice had launched a probe into potential fraud being conducted at the company. So I'm a big believer that it's not the entire company of United Healthcare committing the fraud. It would be just a few select individuals. And then it really doesn't change anything about what's going on with the company itself. It's still a leader in insurance. Insurance is still something everybody's always going to need. This is just bad news and bad PR affecting the stock price because it just makes it look bad, Doesn't sound good. But those are moments when I like to invest in stocks, given that everything else within the company makes sense to make it investable. But bad news and bad PR just hurts the share price. And being that you're investing in that company for the value of the share price, if the share price is lower, you're investing at a lower cost and you're getting a better deal for the stock you're investing in. So those are my 3 holy trinity of what I look for in all-time high environments. I will say it's also not a bad thing to invest in certain companies while they're trading at all-time highs. I would suggest it's not my first go-to, but what I will say is that if you are looking at a company, you want to be invested in it, you want to hold the shares for a long-term period of time, just because it's at an all-time high doesn't mean it's a bad investment. Now, of course, you would want the all-time high to keep pushing. You want to appreciate on your investment, but if it's something you want to be involved in and you believe we are in a market environment that is going to continue carrying that asset, that doesn't mean it's a bad buy. I would also like to say when we push further into all-time highs, there are stocks that are leading that trend and leading that movement. So of course, there's going to be assets and stocks that are appreciating through their all-time high over and over and over again. So where I'm leading into is this week, I'm going to take $50. I'm going to take this $50 and I'm going to break it into 5 $10 increments. Then with those $10 increments, I'm going to put it in 5 different companies. Then that way I could spread my money out, invest in a couple different things, and keep it very budgetary. So that way I don't have to break the bank or spend crazy money to get invested in the stock market. I could take what's comfortable for me, what's feasible for my budget, and still get involved in the stock market. And with these 5 picks, I'm going to demonstrate basically all of the refined strategics that I was just discussing. So my first pick this week is Apple. I've mentioned Apple a few times, but it is a major component in the world that we live in. It's something I always want to be invested in. And with the market leading into all-time highs, Apple is still 22% off of its all-time high. So it's falling behind, working at a slower pace than its peers, so to speak. And I just think that is enough of a reason to be buying it. It's something I want to own. It's a company I want to be invested in. And the fact that it's underperforming its peers tells me that once it finally starts to play catch up, it's going to rally hard. So I'm investing in that. They also pay a 0.5% dividend, meaning that just for owning those shares of Apple, they will pay you every 3 months just for ownership of the shares. So dividend income is another great way to create wealth in the stock market. My next pick this week is Alphabet. So Alphabet has been kind of fighting in court a fine that they need to pay to the EU. It is seemingly so that they are losing that battle and that they're going to inevitably have to pay the fine, which of course would be a hit to their bottom line. It's about a $4 billion fine. So yeah, I mean, it is Alphabet, but it is also $4 billion. So quite the hit. And the stock is actually falling because of that. Friday into Monday, we saw it kind of bleed out and fall through. And I'm buying it at 166 because it's Alphabet. It's a major component of the world that we live in. I love the company. I want to be involved in it. I want to continue owning it for the next 10, 15, 20 years. And this price discount is just a cheaper entry point for me to be buying those shares. And like I was just saying earlier, bad PR that, whoa, they're paying a big hefty fine. Like, that's crazy. But 10 years from now, this one thing is not going to change the entire company of Alphabet. It's not going to change their assets. It's not going to change their portfolio, the staple that they are in the world. None of those things change. So I'm buying on that bad PR, like I was just mentioning. Now, my third pick this week is MasterCard. Last week I did buy Visa. Now this week I am buying MasterCard. They essentially trade like twins. You know, you would see them really kind of move identically. But this week I'm evening it out. I'm putting my money into MasterCard because it did fall 6.5% off its all-time high. It fell a little further than that last week, and it hit its one-year average. So there's another perfect example of exactly what I was talking about. It was sitting at its all-time high, fell about 10%, hit its one-year average, and it's just been running since then. So another great example of how I use price discounts and these averages to find good buying opportunities in the public market. Now, my fourth pick this week is a little different. I am going with Netflix for the fourth one. But the reason I'm doing that is, like I said, during a market rally, there are going to be particular stocks that lead the trend. Netflix is evidently leading that trend. And judging by what I'm looking at in the charts, the trading analytics, there's no like textbook word for this, but I kind of call it like surfing the 3-month. So it's broken out of its range that it's in. It's been rallying, and it'll go up X amount of percent, and then it'll, for a week or so, cool off, calm down. And then as it's cooling off, it's trading in a narrow range. It's not going much higher. It's not going much lower. But as it's balancing out, the 3-month average catches up to it. Now, because it's in a fresh rally, it's not going to touch that 3-month average. It might be 1% over it. But then once it starts to get near enough to it, it will begin to run again. So I do think that trend is evident in Netflix right now. The charts are showing me that. And as I said, everything doesn't need to be bought at a discount as long as you're buying the proper companies that you want to be invested in. Netflix is something I want to own for the next 10, 15, 20 years. So buying it at $12.75 as opposed to $12.50 doesn't change my bottom line. $12.50 would be, in that example, the better buy. But $20 on an asset like Netflix for 20 years, that's not going to be the game-changing difference. And one good piece of advice I've received when investing, and I think it's one of the better things to keep in mind, you're never going to buy a share of stock at the lowest price. And you're never going to sell that share of stock at the highest price. But if you're buying it at a great price and you're selling it at a great price, you made a great trade. And that's all that we could really ask for. So moving on, my fifth pick this week is Airbnb. So Airbnb, changing the real estate landscape, changing the way owners of real estate could utilize their properties. And I love the company for that. So again, changing and molding the world that we live in. But they actually fell again to their one-year average. So From their recent highs, they fell 6.5%. They landed right there on that 1-year average. Spent about a day or two hanging out at those prices, kind of balancing out. And I think it's going to run from there. So with a positive market environment, with an upward trending market, and with record highs being shattered every other day, you need to have a more refined and educated approach to how you're investing in the market. And hopefully this guide is helping you attain that. Another thing I would like to just say, we'll call it an honorable mention. When the market is at all-time highs, I'm never shy of buying the UPRO ETF or the TQQQ ETF, because those two ETFs cover the market indexes. The UPRO covers the S&P 500 and the TQQQ covers the NASDAQ index. So that way you can invest broadly in the stock market. You don't have to worry about picking any particular stock at its all-time high. You could just generally, plainly invest in the stock market and then have your money invested in the market as this rally continues into all-time highs. So just for example's sake, if you buy the market ETF, the S&P goes from 6,100 to 6,500, you're going to benefit from that. So you don't have to worry about picking the right stocks. You don't have to worry about making the wrong decision. You will be invested in the market and your money will be carried with the movement in the market. I would also like to say both of those ETFs are double weight. So if the market moves 10%, that asset should appreciate 20%. So happy to help anybody who has any further questions about the market environment or what they should be investing in. My job is to make you not only confident in your money, but confident in knowing how to make money. I'm here to educate everybody with the stock market. It is the greatest money generating tool that the world has to offer, and I want to show that to everybody. So follow me on Facebook, Instagram, Threads. You could find every episode of my podcast on YouTube, Spotify, and Apple Podcasts. And please reach out if you have anything you want to say to me. I appreciate all feedback and I appreciate all questions. Thank you for tuning in.